Hey, good morning, everybody. Welcome to the Morning Volatility Report. This is Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, welcoming you to this, well, looks like a rainy Friday. Still rain. The rain in Maine is mostly on, well, the plain. We haven't had only a couple of frosty mornings, though. Anyway, Mark and I are going to do using options to trade for direction. This will be, we do a simple course on this. This is going to be an advanced course. The basic idea here is we want to show techniques to try to build the maximum amount of direction for the least amount of money. Okay? That's the idea of this course. So, if you think something's going to go up or down, kind of based on where things are trading, what's a way to maximize a return and minimize the risk? And not, just so you just don't go buy calls or just sell put spreads or something. Sometimes, there are usually trades you can make that could give you the curvature you want with minimal dollars in risk. So that's what the course is going to be. If you're a beginner, going to be tough. If you've been trading options for a little while, probably a bit more toward what you're looking for. Okay, it will be December 5th, 9:30. All right. Alrighty, and with that, we will move on. Mark's little blog yesterday, we saw a lot of weird action in volatility. Looking at the VIX probably backs off and probably dies as we enter Thanksgiving. I think that certainly is a good, that has a good shot. Okay. That is basically kind of the crux here of what I'm talking about. Ooh, wow, are we hitting a new low for, not quite a new low, 28.5, I think. But so they took a little bit out of VIX and they're taking a little bit out of the D's futures. We broke 18. We were kind of looking for that yesterday. We now have what we'll call like a normal curve. You have, with just within one day, right? Cash drops, vol drops, boom. And we'll see how it holds up for the holidays. I have a hard time believing the volatility is going to hold up. It feels like the market has decided the Fed's going to raise, and they're okay with it. So I think any latent volatility right now is sort of from whatever nervousness there is about that. We do have a non-farm payroll number coming that, unless it's just totally disastrous, will keep the Fed from raising in the short term. That's what I would say there. Okay. As far as our market goes, it looks pretty good. I think the rally if the rally holds up, if VIX sees the 15 handle, I would expect our rally to continue. Everybody's just going to kind of get on board with, besides the terrorists, things aren't so bad. Right? The Fed can start raising. If you recall, the Fed raised rates through the 90s, and the stocks had no problem rallying. So you just need to have the growth and earnings to kind of go with it. Some themes we'll look at. We'll explore some of the retailers. Might be interesting as bounce play. Again, we'll look at a little volatility, and look at some stocks that could be poised to sort of make a run. What I will say is the commodities still feel pretty dead. Almost every commodity stock we look at, it just until there is some sort of reason for those to rally. I think that China or the slowdown in China has really crushed that market. It seems like it had been kind of overdeveloped, all the commodities, and it's just going to keep rationalizing until it finds some bottom. It doesn't look like it looks like we could stay here for a while. But we looked at a stock like Mosaic yesterday where there's some interesting paper that looks like they're trying to bid it out. All right, so we'll see if we get any moves there. But again, look at all of the market leaders, right? Stocks like Tesla, Netflix, Microsoft is down a little bit, was up a bunch yesterday. LinkedIn, all of them. Google, getting close. If it's not at an all-time high, it has to be super close. Facebook, they're going to rally these things, probably till the end of the year. We've seen it before. Nike just split, right? Split, stock buyback. Boom. So we could look at more plays. The problem is, I don't like buying into these huge rallies. But certainly helping. And if the Fed thinks that the economy can handle rates, maybe everybody's ready to kind of shake that off. And I think that's what we got. All right. All right, everybody. Have a good day, and we will talk to you today in the chat room shortly.